We're going to do a summary of accounting report cards. So I talked about the balance sheet, the income statement, and the statement of cash flow, and why I think the statement of cash flow is the most important of those three pieces of paper. We've talked about in previous videos that a balance sheet is a screenshot or like a photograph because it only shows one exact moment in time and it has a date. The thing with that is that because that is the case, then it can be manipulated, and when you look at it like even a week later, then it might be fake. An income statement is like a movie. The only problem with the income statement is that it only shows profit, and profit is a theory because it doesn't show if we've received the money, it doesn't show if we've paid our bills. The cash flow statement is a movie, and we can look at our bank account and we can see if there's cash on our bank account, right? And because of that, then it's a fact, right? The profit is not in our bank account, the cash is in our bank account, so the cash is real. We do not want to do only cash accounting. So you could say, oh, Palle, but the cash flow statement is like the cool one, right? Let's not take the income statement, let's not do the balance statement, let's do the cash flow statement, which is actually like a lot of people do that, except like then they get screwed by the IRS in Denmark, right? So they only do cash accounting, right? But cash accounting is like only suitable if you're like a drug dealer, right? You're selling drugs, right? So that means like when you sell something, then you get money. When you buy something, then the money goes up, right? So that is like cash accounting, right? But it doesn't give you any optics, right? So accrual accounting will tell us how we're doing on the profitability and the cash. Cash accounting would only let us track cash. So it will not give us optics. And we need the optics to go in and like have the blood samples like if we're at the doctor, because like the things we can't see can kill us. So we do need the other pieces of paper in order to see how are we progressing with profitability. But we need to track that, and we need to track the cash. Of course, if our bookkeeper or accountant is a tax accountant, then his job is to make things go to zero, right? So then we have no profit, right? Because we don't want to pay tax, right? But that again doesn't really give us any optics, right? So that's why like our income statement can be like kind of flawed, especially if we have a tax accountant or the management in the company doing the accounting is focused on not paying tax, right? Because then everything gets written off, right? And that doesn't give us optics. It's like, it just looks like, what is going on, right? And the other thing is that wealth creating and lifestyle is not compatible. So it's incompatible. So if we are wasting a lot of the resources inside our company, maybe we have a short-term rental and we're buying a lot of stuff, right? That's not related to the company, just to use it like private, right? Then we can't really use the money to grow the company, right? So we have to like make a decision in our company, right? Because if we eat 20 Mars bars per day and want to stay skinny, that is not compatible, right? And the same thing in a company when we look at the different expenses we have, right? So if we're buying the expensive MacBook or iPhone where we could use a cheaper Samsung phone, right? Then we could have used the spending difference on something, on a different asset that could have created us more money, right? So wealth creation and lifestyle, right, is not compatible, right? So we kind of need two different accounting systems. The cool thing is that like QuickBooks can do this. So QuickBooks can have like the tax accounting and the normal accounting. So it's like separate, right? So like you can put things on the different ones. So you keep the optics, but you don't pay the tax, right? But we really need to have a management accounting, right? Because the tax account will just write everything off. That doesn't really give us any optics. So with the management accounting, right, then we want to track like how are our assets performing in converting into sales. How do our sales convert into profits? How do our profits convert into cash? So the balance sheet shows us assets. So we need the balance sheet, we need the income statement, and we need the statement of cash flow. There's a story with Google. So Google has two different buildings. So one building is where they do the tax accounting, and then the other building is where they do the management accounting. And these two buildings do not talk to each other, right? Because it's two different sets of books. And we really need to look at how good we are at converting revenue into sales, how good are we at converting sales into profit, and how good are we at converting profits into operating cash flow. So we want to, as business owners, minimize the number of assets we have, maximize the number of sales we have. We want to control the difference between our sales and our profits so that we can maximize our profits. We want to control the difference between our profits and our O cash so we can maximize our operating cash. So assets turns into sales. Sales turns into operating cash. And that is what we need to track. We need to track at how good are we at converting assets into sales and sales into operating cash flow. And that has a fancy name. So the fancy name is return on assets. So we want to minimize the number of assets it takes to generate $1 of profits. So we can control the income. So for instance, I have a house. So I can rent this house out to a project down here for 20,000 Danish crowns per month. I can also find long-term tenants and they would pay around 8,000 crowns for this house. Then we have a different house. This house we might be able to rent out to the same project for 13,000 per month. We can rent this out for 5,870 Danish crowns per month. So when we compare this, right, there's a huge difference if we do one thing with it or we do the other thing with it. The thing is that when we look at it like more like long-term at the assets, then the first asset, the difference in price is like 150,000 Danish crowns. But if we look at the first asset, right, it has a master bedroom, it has a secondary bedroom, has a guest bedroom, and then it has a second living room that can be used as a bedroom. So it has 4 rooms. Then it has 2 bathrooms. The second property here has 1 room upstairs, maybe a second room upstairs. Then it has a toilet upstairs, right? But besides that, then it doesn't have it, right? So when we look at these 2 different assets, right, then these assets are not created equal, right? The top one, the top asset is much better, right? So we need to look at our return on assets. And then we need to decide, okay, in the future, if I buy more assets, would I buy the top kind or the bottom kind? And we can see that the top one makes more cash, much more cash flow, and is much more sustainable, and a lot more people would rent the top one. And it's always, when we look at it, when the cost is paid on a property, then every single dollar we can raise the rent, or every single dollar we can raise the price on our products, is pure profit. So every bad decision always starts with a bad idea, and we as owners need to minimize our assets and maximize our profits. So you see, like here, the top one makes a lot more money than the bottom one, right? So we would rather own one of the top one than two of the bottom one. And that's what optics gives us. So as an example here, I'll go through some parts I made with like an Airbnb business I created on March 2021. So I'll just go through the numbers. So in the next video, I'll go through the first one. So I'll explain a little bit about like the balance sheet, the income statement, the cash flow statement, how it relates to like a real life example. There's going to be 4 videos. So we're going to go through first the first part, second part, third part, fourth part. So we'll follow this little business for 4 months and like learn the language of business a little bit. So subscribe to the YouTube channel, become a minion and join our membership on sigway.com. If you like the video, give it a like. If you don't like it, give it a dislike. What do you think? Write it in the comments below. Else, there's a playlist to these videos up here. Thanks for watching. Have a wonderful day.